Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance and business. You know there are some filings that are just packed with drama, and this newest one from Abpro Holdings Incorporated certainly fits the bill. We are talking about a whole lot of financial maneuvering and some serious risk factors. Let's dive straight into what Abpro Holdings Incorporated is up to. This is a company that is really in the biotech space. They're trying to develop new antibody treatments for some pretty tough diseases. Think immuno-oncology and ophthalmology. They have these fancy platforms called Diversimune and Multimab to help them discover and engineer these new drugs. Now this filing is all about registering a whole bunch of shares for sale, around 9.7 million shares of their common stock that could be sold. And get this, they have this standby equity purchase agreement with a company called Yarthasu PN Incorporated, where Yar has committed to buy up to $50 million worth of their stock. The big takeaway here is that Abpro isn't getting any of the money from Yar selling these shares. They might get up to $50 million if they decide to sell shares to Yar directly, but that is a separate deal. The market's reaction to these shares being available for sale could really shake up their stock price though. And when they say substantial, they mean it. We are talking about shares that represent a massive chunk of their total stock available for trading, and even their total outstanding stock. This means a lot of shares could hit the market, and that can really push the price down. It is a classic scenario of potential dilution and market pressure. So they've got these cool platforms and they think they have an edge, but they are also very clear that competition is fierce. They're up against some big names and other innovative companies out there. Now we're getting to the nitty-gritty, and honestly this is a huge red flag. The company's own management admits that they're not sure if they can get enough money to keep the lights on. This is what is called a going concern warning. It means they might not be able to operate for much longer without more funding. This is a serious issue for investors because it means the company could essentially go bankrupt. Adding to that uncertainty, their drugs are super early stage. They've never even been tested on people. That means all the money and effort put into them could amount to nothing if they don't work or are unsafe. It is a highly speculative business. Let's check in on where their stock is trading. Their common stock is under the ticker ABP, and their warrants are ABPWW on the Nasdaq. The stock price needs to stay above $1 for them to remain listed on Nasdaq. And speaking of Nasdaq, it looks like they've had some trouble staying listed. Back in April 2025, they were notified that their stock price had been too low for too long. Nasdaq gave them a deadline to fix it. They did get a temporary reprieve from the panel after presenting their plans, but it comes with strict conditions. Failing to meet those could lead to delisting, which would be a major problem for trading and liquidity. To try and help with the listing issues and maybe make their share price look more appealing, they did a massive reverse stock split. Imagine every 30 old shares becoming just one new share. This usually makes the stock price go up on paper, but it doesn't change the company's actual value. Sometimes it can even hurt liquidity because there are fewer shares out there. Now let's look at the money. For the 9 months ending the 30th of September 2025, their revenue was basically zero compared to a small amount in the same period in 2024. This is mostly because they earned revenue from research services for Celltrion Incorporated related to their ABP 102 drug, and that just stopped. They're banking on future product sales, not current service revenue. Their research and development expenses dropped significantly. Why? Because most of their staff were put on furlough. This tells us they are really cutting costs, likely while trying to secure more funding. General and administrative costs went up though. That is mostly because being a public company is expensive. Think legal fees, accounting costs, insurance, it all adds up. But they did manage to lower payroll costs by reducing their workforce. It is a balancing act of cutting costs in some areas while increased costs in others. And here is a number that really jumps out at you. As of late September 2025, they had just $328 in cash. That is a staggeringly small amount and really emphasizes that going concern warning. They desperately need funding. Let's talk about their products. They have two main ones, ABP 102 and ABP 201. They are developing these using a special Tetra B antibody format, which means they can target two things at once. ABP 102 is for cancer targeting HER2 and CD3. ABP 201 is for eye diseases targeting VEGF and Ang2. These are still in early development, as we mentioned. For ABP 102, they have a partner, Celltrion Incorporated. This is important because partnerships can bring in money and expertise. They also have deals with Abpro Bio International Incorporated for ABP 201 and Nanjing Chia Tai Tianqing Pharmaceutical Company Limited for ABP 150. These collaborations are key to their strategy, but they also come with risks. But there is a fly in the ointment. They are in breach of a license agreement for ABP 201 with AstraZeneca. This is a major legal and operational risk. They could lose the rights to that drug. They really push the advantages of their Diversimune and Multimab platforms. They say these platforms give them better target access, faster discovery, and more flexibility in engineering drugs. They think this helps them stand out in a crowded field. And here is a classic risk. They are worried that if analysts don't cover them or write negative reports, their stock price could fall. This is a common concern for smaller companies trying to get investor attention. This is a repeat of an earlier point because it is so critical. Nasdaq has strict rules, and if Abpro Holdings Incorporated can't meet them, they risk being kicked off the exchange. That would make it much harder for people to buy and sell their stock. Okay, let's look at the balance sheet for the 30th of September 2025. Total assets at about $1.7 million. But here is the catch, their current liabilities are over $17 million. That is a massive hole and explains that tiny cash balance we saw earlier. They owe way more in the short term than they have readily available. And their stockholders' deficit is negative over $15 million. That means the company owes more than it owns. Combined with that near zero cash number, it paints a pretty stark picture of their financial health right now. Looking at their operations, if we check out the net loss for the 9 months ending the 30th of September 2025, it is over $8.5 million. And for the full year 2024, it was around $7.2 million. These are significant losses and show they are burning through cash quickly. This accumulated deficit number is huge, over $124 million. This means over time, the company has lost more money than it has made. It is a cumulative record of their financial struggles. So what is the story here? Abpro Holdings Incorporated is a biotech company with some interesting technology and promising drug candidates. They formed some key partnerships, which is a positive sign. However, they are facing extreme financial challenges with very little cash on hand and significant short-term liabilities. Their stock is also at risk of being delisted from Nasdaq, and they have a breach of a critical license agreement hanging over their heads. The going concern warning is the most serious indicator of trouble. They need to find significant funding and turn things around very quickly or their future, even as a going concern is highly uncertain. It is a high risk, high reward situation, but right now the risks look pretty overwhelming. Alright, that is our breakdown of Abpro Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.